In continuation to our previous topic, that is TDS and TCS, there are following provisions to be covered. The first will be TDS at 20%. Having covered till 10%, we are now into 20%. So there are three other categories. So one is 20%, the other is 30%, the other is miscellaneous thing. That is without rates. For example, salary, where there is no specific rate applicable, rather it is based on the slab rates of the individual to whom the salary is being paid. So TDS at 20%. 194E is what we are going to see now. 194F is not much of relevance. So 194E, payment to non-resident sportsmen and sports association. Now, what is sports and sports? It should be seen in the general parlance. That is, games like crossword puzzles, horse races cannot be included in this section. They are separated. They are dealt with in a separate manner in a different section at 30%. So now 194E, only income referred to in section 115 BBA will be covered. For example, non-resident sportsman, being an Australian cricketer or New Zealand cricketer or whatever be the person. Now, what are all the kind of income included for such non-resident sportsmen? So obviously, one, participation in any game or sports in India. Second option, advertisement. So if he takes part in any advertisement that is for in India. Then the third option is contribution of articles relating to any game or sports in India. The second point is guarantee amount paid or payable to the non-resident sports association or institution in relation to any game or sports played in India. So the rate shall be 20%. There is a specification that such person, if there is already TDS deducted from their income, they need not file return of income. So cess should be included in their income. That is the TDS deducted. So it is 20% plus 4% of cess, which will give us 20.8%. Next is TDS at 30%. Here, if you see, as told before, crossword puzzles, lotteries, and horse races are dealt with in a separate section, that is 115 BB, where 30% of tax is applicable. So such amount should be deducted only if the threshold is the threshold for such payment is 10,000. So if we see for 30%, only this is covered. Rest all are other sections. That is, it is not covered under 30% category. So the first is section 196, where it talks about interest or dividend or other sums payable to government, reserve bank, or certain corporations. So there are four kinds of corporations mentioned under this section. If paid interest or dividend paid against any securities to these four corporations shall not be liable for deduction of tax. So there will be no TDS applicable on any payment of interest or dividend to these four kinds of corporations. The next is section 197, where a certificate is issued by the assessing officer based on an application made by the assessee for reduced rate of taxes. Say for professional, if there is a working capital crunch for the assessee and he cannot afford to pay 10% for a professional fee, he can apply to assessing officer asking for reduced rate of taxes, say 2%. So assessing officer will go through the papers and then he will decide whether to provide the certificate of lower rates or no deduction of income tax. Next is 197A. There are a few cases enumerated where there will be no liability on part of the assessee to deduct taxes. So TDS on salary, that is at employee slab rate. As mentioned before, it does not fit into any flat rates. It's rather based on the receiver, the salary receiver, that is employee slab rates. There are few conditions mentioned in the section. So first one is the liability of deducting or the responsibility of deducting is now casted on the employer as per the Act. So for any deduction provided, for example, house rent allowance, leave travel concession, or any Chapter 6A deduction which is going to be claimed against the salary income, or deduction of interest under the head income from house property, there should be evidence or papers collected from the employee by the employer before deducting taxes. So the employer should not only deduct TDS based on the salary paid by him, but also should collect the details of any other income from the employee, and provide him with deductions under Chapter 6A, and reduction based on his allowance, that is house rent allowance and leave travel concession or assistance, and loss from any other head should not be considered for TDS purpose except loss from that is house property income. So there are two cases applicable in this scenario, that is two forms applicable. One is 12BA and the other is 12BB. So for all the requirement to obtain proof, what I was mentioning before, 12BB should be obtained from the employee, asking him to give the details of all his house property. Say if he is into rent, and HRA should be given. For an HRA above 1 lakh, PAN of the landlord of the employee should be obtained. So 12BB is where all these details should be asked from the employee. 12BA is a case where all the perquisites or any other payment made in lieu of the salary by the employer to the employee should be given. So this form, that is the separate form of 12BA, should be given only if the salary paid or payable to an employee exceeds 1,50,000. For all the other employees, particulars of perquisites or profits in lieu of salary shall be given in Form 16 itself. So Form 16 is the form where it's like an annual statement giving the total salary paid. It includes the TDS deducted during the year by the employer, or any other income based on the 12B submitted by the assessee or employee in this case. Next section is 192A, that is to stop or in fact reduce the premature withdrawal from employees' provident fund account. This provision was brought into effect. So when is this applicable? When you have been in employment for less than continuous 5 years, you withdraw your employee provident fund, then you will be subject to tax at 10% at the time of payment of, that is at the time of withdrawal, if the amount is above 50,000. Say within first 5 years of your initial employment, there was a change in your employer, then all you have to do is change the account to the new employer. You need not withdraw. So only if there is a withdrawal, this section will be applicable. If there is a change in employment and the account has been changed to the new employer, this case will not be applicable. So the second condition is that whenever there is non-submission of PAN by the employee, then the rate will not be 10%. It will be at maximum marginal rate, that is 30%. Coming to TCS, tax collected at source. So as said before, tax collected at source is on our income, whereas TDS is on our expense. Again, at India level for TCS, there is no much of interpretation required. We'll just remember the rates at which the TCS will be charged, so that for MCQ or in the descriptive question, if it's a part among the other questions, we'll be able to answer it. So here, the major, or I would say the important points would be one, scrap, because scrap from manufacturing process alone is subject to TCS. So in case if you get a question in your exams regarding the scrap, which is about which is from others, say packing materials, you are into production of some article, but the scrap is from actually packing material, then that is not subject to TCS. Only if it's in the process of production, this will be subject to TCS. Second will be sale of motor vehicle. Say there is a sale of BMW or Mercedes car, which is above 10 lakhs, TCS at 1% should be deducted in that case also. It is from the distributor and not for second hand sale. The next category is at 2% grant of lease or license for parking lot or toll plaza or mine or quarry. So take any mall or something, generally it will be outsourced. In general, say the parking is outsourced to a third person. So for taking this rides, we'll have to pay an amount monthly, or so on the initial payment, TCS or TDS will not be applicable. However, once the grant of license is on monthly basis and on each amount, TCS should be deducted now. So here, 2061F, that is sale of motor vehicle, is subject to tax at 1%, and grant of lease or license is subject to tax at 2%. So with an example here, we'll see how to calculate few provisions. So on verifying these provisions, the first thing is that it is on professional fees. So on professional fees, it is chargeable to tax under section 194J. What is the slab? That is a threshold. It's 30,000. So the first payment itself is above 30,000. So from very first payment, tax should be deducted. Now it says the amount was paid to Mr. X on 1st July. It's actually either accrual or payment, that is amount credited or actually paid, whichever is earlier is the time of deduction. Since there is no details of invoice or accrual being given here, let's not worry about it, rather take it as an advance being paid on 1/7/2019. So interest, how should interest be calculated on? There are two categories. One is late deduction, that is when the amount itself is not deducted. Second category would be amount is deducted from the other person but has not been remitted to the government. So first category, that is amount being not deducted. 1% of tax shall be applicable, interest shall be applicable on such late deduction. So here on 1st July he should have deducted. However, actual deduction has happened on 28 Feb 2020. So on what amount we'll have to calculate? 10% is applicable for professional fees. So 40,000 into 10%, that is 4,000. We'll have to calculate 1%. So for late deduction, it is 1%. For 4,000 into 1% for how many months? July, August, September, October, November, December, Jan, Feb. 8 months. So a month or part of month is also included. So even if it is any date in Feb, we'll have to include 8 months. Next part of the question is about late payment. That is, it should have been remitted within 7th of subsequent month from deduction. So in this case, since the deduction has happened in the month of Feb, it should have been remitted within 7th of March. However, the actual payment has happened in 22nd of June. So there will be 4 months, March, April, May, June. So for 4 months, we'll have to calculate 1.5% on the entire 9,000, because even the balance 5,000 has been deducted in the month of 28th Feb. However, the same has been remitted only in the month of June. So 9,000 on the entire 9,000, 1.5% of interest will be calculated for 4 months. So based on the previous exam questions, it appears to be like up to 5 to 8 marks is where we are looking for. So comfortably we can get these 5 marks if we are thorough with the sections, the rates and threshold. So first concentrate, do not go into reading the conditions applicable for each section, first remember and get an overall idea of all sections. So whenever someone pops a question, you should be able to tell at least a threshold and the rate. Say, for example, 194C, you will have to say immediately that 1 or 2% based on the contractor or the subcontractor, and the amount that is the threshold shall be 30,000 single payment or 1 lakh for the year. So get an overall idea, then go into reading for conditions applicable for each section. Then you'll have a good grip of all the sections. MCQs are being tested on the interest payment. So have a comfort over computing the taxes. That is, you can remember the number of, that is a rate, that is 1% and 1.5%. However, calculating the month, that is, it should be included, and you will have to know the provision. That is, say here they have given legal or advisory services. Even for calculating interest, you will have to know the rate at which such services will be taxed. Only then you will end up calculating correct interest. So first concentrate on reading the rates and the threshold for you to know whether interest will be applicable from the very first payment or only on the entire payment. The first question is on firm-based salaries. As mentioned, no tax has to be deducted either on salary or interest paid by the firm to its partners on capital. So thank you. All the best for your exams.